Hi guys, Wolfie from Starkweb here. Just wanted to make a little video on the markets because I'm probably going to launch the Starkweb Twitter soon, and I thought why not just have some fucking banging trading video that just shows that we're pretty good at everything we do. As one of the first tweets, I thought that could be quite cool. So as you know, we're pretty much fucked at the moment. SPX is going to go down, everything's going to go down. The dollar's going to start to feel its fuckery. But at the moment, when everything's fucked, even if the dollar is fucked, we know the money supply is fucked. We can go and look at the money supply charts. I think I end up typing this in every single fucking video I do into Google. I should probably just start preparing it. But the money supply has just gone absolutely, let's see, since COVID. I mean, it's doubled in the last, since COVID, like last 2 years. And you can just see that boost there. It's just absolutely fucking ridiculous. It's not sustainable. There's going to come a point where this all fucking crashes. And that's a pretty good catalyst for it. It's a very fucking good catalyst for it. But this everything bubble, this fucking crash doesn't happen like that. It doesn't happen overnight. It happens over a very long period of time, likely years. So, we know we're fucked, but it might take a little bit of time for the fuckery to come in. So the theory is, on the very macro term, yes, dollar's gonna die, everything's gonna fucking die. Buy your gold and stack your gold up and stack your watches up and make sure your money's in things that will hold their value over time, so you don't get fucked. But in the medium term, market's still active, and this theory of buy low, sell high is true, but you have to be fractal and not just looking on the macro time frame. So we know on macro, yeah, we're fucked. Gold's gonna go absolutely fucking crazy. The dollar's gonna die. We know that on a macro time frame. But as you can see on the short-term time frame, when everyone is a bit scared, which is what's happening at the moment. So that's on the macro time frame. But on a slightly lower macro time frame, everyone's a bit fucking scared, and it becomes a risk-off market. So people aren't really happy having their money in the SPX and places like that, DPX. Having their money in the S&P 500 and other stocks, cryptos. They don't want to be risking their money. They want their money to be safe. They want to have their money there, ready to deploy for when the markets are ready to turn around again. So when these assets start to fall, you'll see the dollar, amongst gold and other things, the dollar will go up. The reason for this is just because you're pulling your money out of stocks, this, that, and the other. What are you putting it into? Mainly the fucking US dollar. That's why it's seen as a safe haven currency. The dollar is the main form of liquidity used for trading this, that, and the other. Most people trade in dollars. When I trade on my MT4, I usually have it in dollars as well. I believe my account currency is actually in pounds, so it doesn't make much of a difference. But the majority of trading occurs in the dollar. So when everyone's scared and it's a risk-off market, people are going to try to take their money out of the markets. They're going to take it into the dollar. And, because of this money supply shit, the amount of money the government is printing, they're basically just fucking chucking the economy on stilts all through COVID. So we're fucked in COVID. The economy should die. To stop that happening, they print a load of money, a load of quantitative easing, and pump it into the economy. And that's why the S&P was going so fucking crazy, because they were getting so much money pumped into it. And you can see literally leading up to COVID, push, because someone knows it's going to crash. Don't know who the fuck it is, but someone knows. They're fucking push, and then massive crash because of COVID. And then the money printing occurs, and it literally goes like that. New all-time high, goes absolutely fucking crazy. Buying any crypto, any stock, any sort of risk market in this whole fucking period of time, you're making a ridiculous amount of money. And now it's coming to the end of it. We're starting to feel the pain of the quantitative easing, and everything starts to come into effect. So on a shorter macro time scale, the dollar is gonna go up because everyone's taking their money out of S&P into the dollar, etc. And we did see a beautiful move away on the dollar, and now we're bringing it down into an even smaller time frame. We're trying to trade this market on a daily time frame. We can see a huge move up, and the way the dollar continues up is it comes back down, collects liquidity at these sort of levels, and then carries on moving. So the minimum for the dollar to break this all-time high, it's not ready to do it right now. It's so overextended, so much buying. It hasn't returned to orders enough. Anytime you see a market doing this staircasey shit where it's returning down, it's filling in inefficiencies, it's returning to order blocks, it's doing this, that, and the other, so it can collect more liquidity to go upwards. Because the upside liquidity at this point is exhausted, and you can see sellers take over. So they need to collect more upside liquidity in order to push it to higher prices. So we know on this time frame that we're looking at right now, this 4-hour time frame, this fucking price chart, we know that we're heading down for at least this level here. And if we do a full fib retracement of the whole range and get the idea of the whole range, this is the 50%. We're not even at the equilibrium of the range yet. So at minimum, we're going to hit the equilibrium of the range. It's something like this movement is just going to happen. And then something down here on the .705 retracement, collecting these order blocks would be really nice. Another thing we can do is we can pull out the fixed range and we can see, where is the volume. And it's probably down here, but it'll be nice to see. If it loads. Right, trading view. What are you up to, mate? Let's try and chuck another one on. Right, so apparently the fixed range doesn't want to work today. See if we can get a normal volume index. Also, oh, it's fucking DXY. I'm such an idiot. Obviously, there's no trading volume on DXY. I'm being an idiot. Um, but yeah, returning back down to .705, these sort of levels is what we're looking for. So knowing this, the DXY is sort of your master chart for the rest of the markets. You know, if the DXY goes down, Euro USD is going to go up, and we really like trading pairs like Euro USD. We like trading pairs like GBP USD, etc. And if you have a look at Euro USD and some of the price action we've seen recently, we've come down and we've taken a previous like major low. Let's go on to the weekly actually. Taken out some major lows, and we have not actually broken the full low of the range. So this low still remains intact. We've come down, taken out some really major lows like this low down here, and we've returned to fill in these wicks down here. Whenever you come down this harshly, you're just going to get a reaction away. You're going to get an upwards reaction away. And that's why on my Twitter, I believe I just lazily replied to someone with a chart. I believe it was a 4-hour inefficiency. Let's go have a look. Yeah, it was this. Yeah, it's the stupidest shit I've seen in my life. Oh, this is the second one. Oh, I believe I did it. Yeah, I did it earlier here. I should start around 13. So we saw on USD, first of all, I didn't share this publicly, the spring, but we saw you know, it came down, made this low exhaustion. You can see the exhaustion take over. So selling pressure, selling pressure, selling pressure. We run out of selling pressure. Sellers are exhausted. Buyers take over. And off of this, I believe this is around about, yeah, right at the fucking start of New York session. So this is the time zone is New York. So obviously 8 a.m. New York and then 3 a.m. London. Roughly those figures, they change due to time zones, but that's roughly when I'm trading. You know, I sort of sit from 2 to 4 and just watch the markets and see if something cool happens. What do I define as something cool? A low made, a pump away, showing that sellers are exhausted, and then we come down and we spring this low. And if you look at the anatomy of this movement, it's fucking beautiful. A wick to the low, order block created, and a movement up. I would have loved for this order block to get hit, but it didn't. But you could have taken a trade on the spring, which would have been like an absolutely outrageous trade. You know, if we were to trade this, we get down into the 1 minute, go to like a 1 minute chart or even the second chart, and we'll see, okay, cool, we've hit the spring, and then want to take out these highs here. Cool, pushed away from the highs. Are we ready to take a trade yet? Is there any more reaction to the downside? A little push to the downside, feeling comfortable that we've taken the spring. You know, we made a low, tested the low and moved away. So you could take a trade pretty much anywhere now. Stops at this low or stops on the line. I would say stops at this low. And it should just, yeah, move away. That's quite a nice entry there, actually. But then we'll move it back into real time. Back onto the hourly chart. Cool, so we moved away and we've shown this is a very strong reaction away. So the buying pressure here is extremely strong. And that's because the dollar wants to run down as fast as possible and collect those orders so it can continue higher. And we know that the dollar wants to go down really fast, collect orders and continue higher, which means Euro USD wants to come up really fast, collect orders and continue lower. And that's why we're able to take trades that intensely on this, because it's a very, this is a big liquidity release. You know, it's a really nice reversal pattern, and then we saw a movement away. And if you go into the 4 hour, this 4 hour big green body candle, the inefficiency here, if I draw it out, the inefficiency is where there's no buying or selling on either side of the candle, and it's just buys on one side. It's an inefficient pricing, and the market doesn't like these. It will come to fill in usually 50% of it. 50% is a good target. So we drew out a 50% of the inefficiency, and we were posting about it on Twitter, and we came down, and this was right in 1 o'clock of New York. 1 o'clock in New York this happened, and then right coming into London of let's go on to the 1 hour actually, because I believe there was another entry on the 1 hour. It was in London, I believe. Yeah, literally right on the fucking open of London. So we test this inefficiency, we react away, we show strength away, we show that it's rejecting it. And then we come back down for another retest of the lows and return to order blocks, which is right in the London session. And why do I keep talking about London session, New York session? You know, when you're looking for these things to occur, you have the chart work, you have the analytics, you have all the shit you're looking for on the technical side. You need to combine that with strong session liquidity. So right at the open of the sessions, there's usually going to be a lot of liquidity. So London at the open will do something, and New York at the open will do something, because the money comes in and they want to do their thing for the day. And what they'll do is they'll do something to release liquidity. They'll hit a low, they'll return to an order block, they'll return to an inefficiency, whatever, at the start of the day. And that will be the catalyst for the movement for the rest of the day. So the whole goal is these fucking massive institutions, whatever they're planning to do, if they're planning to sell, they're probably going to buy at the start. If they're planning to buy, they're probably going to sell at the start. So you can see they sell down all through Asia. So Asia sells all the way down, and then at New York they spike the lows down here, spike these lows, return to order blocks down here, and we can go in and get a better anatomy of the actual trade. Go down to a 5 minute chart. So yeah, beautiful, beautiful, beautiful down here. And if you draw out a fixed range, we might actually get a really nice reaction off it. Fixed range is absolutely hating me today. I want to draw off this region here. Yeah, so that's a nice little fixed range there. So you can see this is a massive point of volume. So you want to see what the reaction is like away from this. It reacts away from it, doesn't break any of these lows, and then shows strength. And that would be your entry down here. Or you could wait for a better entry, which would be something like that would be a nice entry. See if we push down anymore. If it doesn't, we'll just let it run away. But pretty much anywhere there, you're happy to enter. Entries is a whole different thing. You know, there's a fucking billion ways to enter, and you could miss a trade or take more aggressive trades. You know, so I usually take an aggressive trade on a lower lot size. So I'll be entering, you know, all the way up here. I'll be happy to enter on lower lot sizes because that's a big stop loss, or like a 30 pip stop loss. And then I usually take one big trade, which is where I get like, right. So this is obviously London Open. So this here straight away, this order block, this would be one of my very aggressive high lot size entries. If we were on the 1 minute to come back down and hit this order block, so come back down to the at least this region here, I'll probably be looking for an aggressive entry, because this is just a nice bit of liquidity that's formed at the start of London, and there's two things that are going to happen. We're either going to test it and move away, or we're going to spike the low and then move away, in my opinion. Now that we've like shown that we're rejecting this 50%, it's unlikely we're going to hit the 50% again. So basically banking on the fact that this is going to hold, and because of that, I believe this is going to hold. You want to go with fractal price nature. If I thought we were going to get a liquidity grab, so a spike, then I'll be looking for a liquidity grab or a spike. But because I believe like my trade is based on this holding, because the volume's up here, it's a little bit higher. My trade is based on this little range holding. That means I'm basically basing my entry on this holding as well. It's hard to explain, but it's called fractal trading. Whatever you look for on a macro, you're looking for the same thing on a micro, and the same thing on the micro, you know, the seconds time frame, stuff like this. But we can let it play out, and that would have moved away really nicely as well. So why am I saying this? Why am I talking about these trades that I've done and have finished? You know, now that we know that the DXY is heading to collect more orders and it's still not done, it still needs to get at least to that 50% or at least to these levels up here. We can say the same thing with EUR USD. It's just fucking the DXY flipped on its head. That's how you look at it. It's literally, we need to come up here in order to take these lows. So what we're going to do, we're going to come up here. This is a beautiful fucking accumulation schematic, by the way, but that's a little bit more technical, no need to get into that now. But I know with this movement up, you know, this is a very strong bullish movement. The market's very manipulated right now. We're just going to push up like crazy to these highs here. But in order to do that, we need to come back down. Tomorrow is Tuesday, so to fucking check, because NFT space, you literally lose count on what fucking day it is. But tomorrow is Tuesday, so I'll be looking for some sort of entries, at least back down in this major volume region here. At the very least, I'll be looking for entries down here. Coming back down to test this like wick here again. We're saying this is holding, we're saying this is holding, so we're going to hope this is going to hold. If it doesn't, then I'll look for entries off of this line here. But I wouldn't really like it to come down that low, because it means that we're not on this absolute bullish tear right up to collect orders, so we can jam away again. But that's what I'm looking for. And the other thing you can say, okay, well, I know that we're obviously very overextended on the bull side, and what we want to do in the week, so on the weekly time frame, we want to push it up here. So knowing that, it means on Tuesday, we're probably not just going to instantly push on the open up here. So you can actually take a sell trade, maybe look for a little liquidity grab here or something like that, a sell trade down, and then hedge it and take a buy trade here, and you leave your sell trade running. So you sell into for Tuesday, I want to buy down here. Knowing that, I'll sell at the start of the session, or maybe I'll sell in Asia, or I'll sell in London. Usually London's the one that goes the wrong way, and then just to get ready for New York, and then New York reverses it. So I'll probably sell in London. That's most commonly what I'll do. Wait for New York, and if New York's showing strength here in New York, or like here, if it's not even able to get down to this low, you know, it's just hits this and then rejects away, I'm like, cool. You know, New York has fucking made it clear what they want to do. They've collected their orders. They want to keep on fucking pumping. Then I'll take a buy trade, and maybe I'll look to scale out more of my sell trade. But I'll definitely leave my sell trade running, just so I can hedge my bets a little bit. Because if I know we're coming down here, why would I not take a fucking sell to hedge myself? But yeah, I hope that was a nice little informative video on the markets at the moment. This is the trade that I'm looking for, and we'll see how it plays out tomorrow.